Right. Good evening, Didi. Can you hear me?
Yeah, absolutely. Can you hear me?
Yes, I can. Awesome. All right. How's the prep going for tomorrow? You're writing tomorrow, so are you on track?
Very excited. Yeah, I'm on track. I managed to go through that past paper this morning. Sorry. Excuse me. This morning.
Nice. That's really good. Okay, so
Yeah.
finding it a bit better, having gone through one past paper already, is it making a bit more sense?
Yeah, absolutely.
Okay.
Feeling actually much more confident.
Oh, that's
Really
good.
loving the kind of like direction with regards to reading the question first.
Yes. Yeah, exam technique is
Looking
very
forward.
important.
Yeah, absolutely. Absolutely.
Okay.
I suppose like online school, they don't really teach it to you because you don't go to lectures. So it's all about like, kind of guessing.
I see. Okay. So
But
IMM, it's totally distance learning, right?
yeah, they do have
Okay.
lecture options, but like
Different.
their primary is it's all about online
Okay.
correspondence.
All right. Makes sense.
Yeah,
All right.
yeah.
Do you have any other questions from any of the other past papers that you want to look at tonight, or we're just going to go through this one again in detail?
I want to go through this one again in detail.
Okay.
I really enjoyed like doing it last night like that. It gave a lot of confidence in like
Be good.
like what I was doing and just putting it across.
All right. Awesome. Okay. Let me just check. Okay. The recording is separate. It's busy running. Okay. That's fine. All right. So I'm going to get started then with this is semester two's paper from IMM Graduate School. We're looking at another past paper final assessment for the 2023 year. The first question looks quite basic. It says,
Yeah.
required, remember, exam technique, always look at what's being asked. They said calculate the free cash flow of the company using the free cash flow model. Have you studied these formulas?
Yeah, very simple. Yeah,
Okay,
free cash flow equals net
do they give
cash
you a
operating.
formula sheet in your exam, or do you have to know all these different
They don't.
equations?
They don't. We have to know all the equations, but it's actually open book.
Oh, it's open
So
book. Okay, so that helps.
yeah.
You can reference it if
So
you
I have
need
got
to.
I've got notes. Yeah, I've got notes on like the main
Good.
formulas and stuff like that.
Yeah, that's very important. So I was just going to ask you about that because I see here they've given you the actual working, but they haven't shown the equation. So I'm just asking if they do provide you with a formula sheet or not. But yeah, if it's open book, then you can create your own formula sheet when you start
Absolutely.
completing these questions. Okay. All right. So
Exactly.
if you read this question, right, you can see this is looking at operating cash flow. Okay. And remember, free cash flow is that money that we have available within the company after having met all of the company's needs, basically. We spoke a little bit
100%.
about this yesterday. We had a similar question, but you had to work backwards. You had to work out I think it was the total operating cash flow. Here you're actually working out the free cash flow. Do you remember
Exactly. So in
that?
my notes, I actually have 100%. So in my notes, I actually have the free cash flow equals
Good.
a net operating activities minus capital expenditure minus the dividends, and then I actually have the three other formulas, which would be plus, etc.,
Yes.
etc.
Okay, that's good.
Already written out.
Okay, so are you happy with this short question? Do we need to spend more time on it or comfortable?
No, that's good. No, that one's good. No, that one's good. I wanted to just jump to the next required.
Yeah, the next one says provide a free cash flow forecast for the next 3 years and value the company using the free cash flow model. All right, so notice you've obviously calculated free cash flow. Remember, if they're talking about a model, a free cash flow model, right, that requires time value of money. All right, yesterday we spoke about a timeline. Remember that?
Yes, 0,
Okay,
1, 2, 3, T1, T0.
Yes, so when you're looking at any sort of capital budgeting type question, you're going to have to draw up a timeline, okay? And obviously, depending on the question, you'll have a certain number of periods. Right, don't forget, in terms of cash flow, you could have something like an initial investment here, then you could have operating cash flow over the life of the investment, and then right at the end, you'll have a terminal cash flow, right? So this is what happens in financial management in terms of capital budgeting and using estimates like this to try create a valuation. In other words, you're trying to find out maybe like an NPV, for example. So yesterday we did quite a lot of NPV calculations. Okay, this could be an NPV calculation. Okay, remember the cash flows that you have here could be anything. It could be normal cash flows, or it could be something like this, free cash flow. Right, so don't overcomplicate things. Just think about time value of money. Okay, and obviously time value of money, principles apply. So you're going to have a rate, which is going to be used to discount, okay, future cash flows back in time. Right. So if you take any of these amounts and you discount it back in time, that could give you something like a net present value or just a present value even. Okay. And then you could use that to make certain decisions based on the actual cash flow that you have. So this is basically what they're asking you to do. This question is worth a lot more marks. I see it's worth 7. This one was worth 3. If you read the question, when you read the question, just tell me which parts of the question relate to this, the model.
Fine. Perfect. So let me read through. Sporting Equipment Pty has reported an operating cash flow of 5 million. So that's important, the operating cash flow.
All right,
and has stated its intention of spending 1.2 million on replacing outdated fixed assets. So it's another one that's important, and increasing inventories. So it's important, but we don't generally calculate inventories in free cash flows, but we could. We'd have to see. The company expects its cash flow to grow 5% per annum over the next 3 years. Pivotal point. That's where we're going to see it start coming in. And the company recently paid a dividend of 300,000 Rand and has advised that uses a weighted average cost of capital of 10%.
Yes. So what speaks to the discounting?
Well, we first got the 5% per annum growth.
Okay, so that's growing in terms of cash flows over a period of time. So obviously the cash flow is going to be increasing over a period of time.
Right.
Okay, you've obviously looked at the first part, okay, because the 5 million, the 1.2, as well as this 300 dividends, that's all part of this calculation. Do you agree?
Right, agree.
Okay, 100%. So this amount represents what?
The first year.
Exactly.
Year like 0.
The original.
Present.
Correct.
Yeah.
Okay, and how much is this growing by?
5% per annum. So we do 3.5 million.
Yeah, so 3.5. Okay, remember to add 5%, you could just multiply by 1.05. Do you agree?
Yeah, 100%.
Okay, and then you would do that again and again. All right, to get those values. Okay, remember this is that free cash flow that you have in the question. Remember, it's an estimate, hey? You've got today's cash flow, and then this is an estimate of future cash flow.
Right, based on that 5%.
Based on what was given in the question, yes.
Right.
Okay. All right. And then if you continue reading, what else does it say here? What else is important here?
The WACC is 10%.
Okay, so that's obviously the discount rate, so the rate that needs to be used. What is it, 10%? Okay.
Yeah.
Anything else here?
That's all I see for now.
Yeah. Okay, so I don't know why you have terminal cash flow, because it didn't talk about that in the question. That's very strange.
Yeah, so that was my one question that I had, and then I looked into it this morning when I was doing it. And actually on page 16 of my study guide, it gives a similar question.
But did they give you a terminal cash flow? Because remember, terminal cash flow is basically the value of this project at the end of its life. So this is basically saying at the end of the 3 years, I can basically sell off this company and I can generate 85 million from it.
Yeah, 100%. So actually in the question, it never gave that. It gave very similar figures, same exact layout. But when I got to the solution of it, it actually gave year 0, 1, 2, 3, like we did free cash flow, and then went straight into terminal value. So I had a suspicious feeling that anytime they ask for the free cash flow model, that they're kind of following the same kind of model, which is free cash flows, then work out your terminal value, then your cash flow values, and then go into an MPV.
Yeah, so that's correct. That's what you're supposed to do. I don't disagree with the approach. So initial investment is important. That's obviously a negative, and then operating cash flow would be positives in terms of cash flow. And then this TCF, this is important purely from a project point of view. In other words, at the end of the life of the project, what could you potentially receive? That could be an inflow. In other words, you're going to receive something at the end of the project for this whole project. In other words, well, in this case, it wasn't a project, it was an investment. Okay, you're investing in this company, and this company is obviously doing business, and this company is growing. So this terminal cash flow here, this, you need to be given information in the question about it. I don't see anything here that points to a terminal cash flow here. So I don't know why they've included this amount, and this amount is a lot bigger than any of the amounts that we've seen here.
Yeah, 100%. So I think maybe the only reason could be because like that's just like the way that they've taught it in the class and stuff like that, or in like that's where IMM wants to do it, which is that whenever they ask for free cash flow, I kind of expect the terminal value to be the next thing. That's what I expect, because when I look in the study guide.
Yeah. So, like I said, you can go look at any textbook. In financial management, you do have to follow this approach. Investment, OCF, TCF. It's not just IMM that does it this way, but now the problem is this value needs to be given because there's no discussion about it. I'm not sure how they got this figure. Maybe they're trying to estimate value at the end of the project. Maybe they could use maybe like free cash flow perhaps, and maybe gross it up somehow. What did they use here? WACC is 10%. No, but see, you wouldn't be able to do that because that's not realistic. You have to be given a value.
So they're actually given us a formula.
Okay, what is the formula for TCF?
Free cash flow in the final forecasted year period times by brackets 1 plus expected free cash flow growth rate. And that's all over WACC minus expected free cash flow growth rate.
When you say all over this whole thing, eh?
Yeah, exactly.
Okay. 1 plus the WACC.
Well, no, WACC minus expected free cash flow growth.
So 1 plus WACC minus, eh? Like this, I'm busy typing it in.
Yeah, but there's no 1 plus, you just remove the 1 plus. All over WACC minus expected.
Like that. Okay, exactly. So basically what they're using here, if I look at this formula, this is basically assuming the last cash flow is constant from this point onwards.
Right.
So this is called a perpetuity. So when you have a perpetuity, you're looking at cash flows. So this is what you're analyzing, okay? And any cash flow from this point onwards, you're assuming that this cash flow is staying the same, because then the perpetuity, a present value of the perpetuity, so if this is at P0, then you would have payment 1 divided by brackets R minus G. So this is a perpetuity type of scenario that they're using here. So I can see why they're using this. It's because they're assuming growth here at the end. They're saying this free cash flow from this point going forward is going to remain at 4 million okay, but from year 3 onwards. So in other words, year 4, 5, 6, and so on. Does that make sense?
Fine. Yeah, I agree. I hear what you're saying.
Okay, so this terminal value that they're calculating here is an expectation based on the current existing free cash flow. So you're just taking future cash flows from that point in time. So in other words, after the end of the project, and they're using a perpetuity equation, which is this, okay, because that's free cash flow plus expected growth. That would be Tn plus 1. Does that make sense?
Yes.
Okay, obviously Tn plus 1 is the next period. Okay, this is Tn, so technically this would have been PV0, and then this would have been payment 1. Does that make sense?
Yes.
All right, and that's why they're using this
definitely.
formula, because they're basically discounting, assuming that the free cash flows are going to continue constantly from that point onwards. Okay. I don't know why they've made that assumption, because they didn't speak about that in the question. It just said the company expects the cash flow to grow at 5% per annum over the next 3 years. Do you see that?
Right. Right.
Okay, so to me, this project or this company would be operating for 3 years. We can't assume that the company is going to continue from that point onwards. This might come to an end, okay, and then this TCF needs to be a value based on the actual company worth or value. I mean, that's a very, 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 very big valuation for this company. I mean, terminal value 85 million, okay, compared to all of these free cash flows, that seems to be quite excessive. But again, it is what it is. Net present value here, 77. Okay, so this working, let's just do the calculation for it. So TCF would have been this formula. So 4051688. 0.05. WACC was 10. Growth was 5. Right. So then your TCF we might need to adjust. Yeah, that needs to go times 1.05 all over okay. Yeah, it gives us the same value. All right, that's fine. Okay, so maybe just remember that point. With IMM, you just need to assume this. You need to assume cash flows are going to continue in perpetuity after the project has ended. Okay, just remember that for future exams, because that's what they've taught you in your study guide. I would definitely use that. Okay, if they've assumed it in the study guide, then use the same thing. Okay, how's the calculator going in terms of NPV? Could you work this out in your calculator?
Very well. Yeah, I could.
You could, eh? All right, so I'm just going to put it here quick, just to put the amount. So obviously you're going to have year 0, year 1, 3 years, eh? That's it, yeah. And then you're going to have free cash flow in year 0, which was the 3.5. And then you had all the future cash flows. The last cash flow, remember, is the total of these two, hey? Okay, so if you put that into your calculator with the rates of, what is it, 10% WACC, okay, and you solve for NPV, did you get the same answer as them?
I'm just doing it now, hang on. Confirming. It's how many zeros for the first number? 5, eh?
What is it? 3.5 million. Yeah, it looks like it's
3, 6, 7. Oh, how about clear? 3, 6, 7, 5, 0, 0, 0. Let's see if J 1 and 3, 8, 5, 8, 7, 5, 0, CFJ, and then 89,137,100 CFJ, and it was 10 RYI to solve for NPV. Yeah, I got 77.
yeah.
77,000,008.
8, yeah, comma is like 06 or something, eh?
26 actually.
26, yeah, that's right. Good.
Okay,
All right, so calculator skills are fine.
Did you figure that in your head?
You're capable of using your calculator, eh? No worries with that,
Yeah,
eh?
feeling very confident with that. Yeah, feeling very confident with that.
That's good. All right, so do you see what you did there? It's basically just time value of money, eh?
Fun.
Just be careful. Make sure you draw a diagram just so you can picture this initial investment. In this case, there was no initial investment. This was just a pure time value of money, discounting future cash flows. Okay, there was no initial investment here. You only had OCF, and OCF actually started in year 0 actually as well. Okay, normally this would have been an initial investment, but in this case it wasn't because you're looking at free cash flow. Make sense?
Oh, fun. Yeah, 100%. I actually see where I made a mistake. What I actually did was I did year 1. I didn't put in year 0.
Oh, yeah, you have to put in all the cash flows, eh?
So I only did year 1 as, and then I did year 1 as 3,500,000 times 1.05.
No, you have to put in all the cash flows as it is on the diagram.
Yeah, exactly. That's what I messed up. Yeah.
Exactly as it is on the diagram. We drew the diagram. There's year 0, there's 1, there's 2, there's 3. Remember, 3 is this plus that. These two cash flows both appear, okay, in year 3.
Fun.
Right. Happy with that question?
Yeah, spot. Otherwise, the rest was good. Yeah, happy.
Okay, good. All right. This looks like a repeat question from yesterday. Do we need to go through it, or are you happy with it?
Happy with it.
Okay. Did you do the questions and then check the answers, or were you just like skimming through the actual exam and just seeing what the questions looked like?
No, I did.
How did you approach it?
Did the questions and then did the answers.
Okay, that's very good. Yeah, I think if you're doing that for tomorrow, I think you could possibly even try aim for distinction, hey, perhaps. Because I mean, if I remember correctly, I think you said you got about 37 or something, and that was leaving out like 30 marks.
Yeah, I got 31. I left out 30 marks, actually.
Yeah, so if you add the 30 marks, you probably could have got 61 or more, even, depending.
Yeah.
Yeah.
I'm really hoping. I'm really, really hoping. I mean, I've got extra time tomorrow.
That's good.
And I'm actually I'm very ADHD, and I've never actually taken my, I haven't been taking Ritalin for a while, but I'm actually going to take tomorrow for the exam.
Okay. Just remember to always focus on workings, eh? If these are written questions or questions that you need to type, even if it's online, it doesn't matter. Make sure you show all workings. Like I would have shown like literally all of this. If this was written, whether it's written or 100%. Online, I would have like drew up everything just to show all the calculations.
100%. I'll do that anyway, so that's spot on.
Yeah, but just remember you need 50 to pass, and then once you've got your pass, then try get a distinction. But make sure you don't like leave anything out. You can't afford to. You need to complete all the questions, eh?
Yeah, 100%.
Rather attempt the question, even if it doesn't go well, but at least put something here. If you don't put anything here, you're not going to get any marks. So rather try, you could get 1 or 2 marks for these things. Do you see that? Or a mark for this, or a mark for that. Or even like this. Normally, if you've made a mistake with the cash flow, they should still give you a mark for your answer because they shouldn't penalize you twice. Because your NPV will obviously be wrong if you got the cash flows wrong.
Fine.
Does that make sense?
I hope that's how they do it. Yeah, that does
Yeah,
make
so
sense.
these should technically be working marks. There should be like a little M next to this. So I know different institutions, sometimes they put like a method mark thing here, like an M for a method mark. Does that make sense?
Fine, yeah, that does make sense.
Okay, because remember, if students make a mess of this calculation, obviously that's going to be wrong. But if the student has used their calculator correctly, then they should still get these 2 marks because they still know how to calculate
So I hope
NPV.
that's how they, I hope that's how they do it. Like I have a sneaky suspicion that they don't. I think they're quite harsh when it comes to that. But I don't know
won't
because
know,
again,
but
I've never.
hopefully they do give you some sort of part marks for those workings.
Yeah, exactly.
Okay.
My plan is to finish tomorrow, and I'm feeling quite confident. So
just make sure you don't leave anything out. You've got extra time. Make sure you do all the questions. Don't leave anything out.
Yeah, 100%.
All right. So this is that A and B again. Okay. Do you want to quickly read it and just give me your thoughts on the question before we look at the actual workings? Remember, calculate the optimum selling price. So optimum meaning?
What's the best selling price?
Yeah. Obviously, if it's a selling price, we would expect it to be the highest, right? To make the most profit, right?
Exactly.
Okay.
But it would be the
what we're going to be
highest
looking at.
when it would maximize its units.
Exactly. I think yesterday the question was the lowest or something, right? I can't remember now.
Yeah, it was.
It was something similar.
It
looked very familiar. When I looked at this, I thought...
Yeah, they follow a very similar pattern.
Yeah. Okay. So now that you know the pattern...
if the maximum profit can be achieved at 70,500, calculate the price at that level.
Yeah.
That was yesterday's.
Yeah. Very similar.
So today is saying a product with a selling price of 1,200, demand level of 40,000 units. For every 100 Rand by which the selling price is increased, a demand of 400 units, and the demand drops by 400 units. The maximum profit is achieved at a demand level of 25,000 units.
Remember we did this yesterday? We could have shown SP and we could have shown demand. Remember you did it this way with like a table. You could have done it like 2 or 3 different ways. This particular institution, they like the formulas, but you could have done it your way even. Every 100 Rand increase in price.
Up, so if it was 1,300, it goes 400 units down. But 40,000 minus 400.
Correct. And they want the maximum profit is achieved at a demand level of
25,000.
So you would keep going until you get to 25,000. This might take a while, so yeah, it's a much longer. Do you see how this is not so
exactly
time effective?
Yeah.
Okay. And you're going to be here in between those two. No, in between those two.
Next to, yeah.
Okay, because there's 24,800 and there's 25,200. So you're looking for the midpoints. Is the 4950. Agree?
Agreed.
Yeah. Okay. What you could have done is you could have said 4,000 units. So that was your method. My method would have been like this. So the demand must drop to 25,000 units. Okay, so how many times? Okay, so to get from 40,000 to 25,000, and it's dropping by 400 units, right? So what is the difference here? This minus that gives you 15,000. Then 15,000 divided by 400 is 37.5 times. So then I need to, every 100, then I need to times it by 100 Rand. That gives me this times 100, gives me 3,750, and then I just add. So new selling price is, does that make sense?
Yeah, 100%.
Okay, there's the maths.
Man, cool.
Okay, so whether you did it this way, or whether you did it this way, or whether you did it this way, you all need to get to 4,950.
Yeah,
See, there's a typo there.
100%.
New selling price. Okay, make sense?
Yeah, 100%.
Okay. This is just an equation looking at the change. I don't know if you remember that one we did last night. We spoke about the change in price over the change in quantity. I don't think they wrote this down yesterday. And then you asked me about the working. Remember that?
Yeah, 100%.
Okay. After having looked at this one or having looked at it or done it, did this one make sense now?
Yeah,
Okay.
much easier.
Remember, it's a change in price. It's not the actual price. Just be careful with that. It has to be a percentage change. Did you see that?
Yeah, I do. So it would be 1,300 minus 1,200.
Yeah, it's a change in the price.
1,200.
Yeah, a change in the price because the price is going down by or going up by 100. Make sense?
Yeah.
And then the quantity
did,
is going down by 400. Must I do it?
No, not at all.
Are you sure?
Yeah, 100%.
Okay, yeah, just please don't forget that, It's the percentage change in price, not the actual price or the quantity. This is very important.
Yeah.
This I want to make like massive. That's the important bit. It's the percentage here. Do you see that?
Yeah, I do see it.
Okay, that's why they do this working first, and then they calculate the price elasticity of demand.
Yeah, that's key. When I did this morning, I made sure to look particularly at the percentage because before I was not doing it as a percentage, just as a number.
Yes, yeah, because I remember yesterday you made that mistake, so I'm just pointing it out because if you do the same thing again, it's going to be wrong. Okay, it must be based on a percentage, so you'd have to multiply these by 100 to get a percent. Happy?
Happy, very.
Okay. All right, that's one question complete. Let's create a new sheet. All right, start reading. What's the question focusing on? Let's go down to the required. Where's the required? Here. Wow, this is a long one, eh?
Yeah, this is quite a big one.
Ooh, did I go too far? Yes.
Yeah,
oh, this is okay. The question starts here. There we go. So I was looking for the question. I couldn't see it. I see it here. And they gave you a layout as well. That's nice.
Yeah, this one was a nice question. It was a long one because there's a lot of marks.
Yes. Okay. So remember practice exam technique. Tell me, what are you going to be doing tomorrow? If you get a similar question like this tomorrow, what are you going to do?
Try and do the required.
Okay, so what is the required saying? And then tell me what section are you looking at, or what are you dealing with?
So we're going to prepare customer profitability analysis for each of the clothing retails and prepare and healthcare retail segments using an activity-based costing. So we're doing with ABC.
Good. Very good. Okay. What else do you need to consider? Yeah. Remember we spoke about ABC yesterday in terms of costing. When you're looking at ABC, what are you doing? What are you trying to do? What's the focus here?
To try and see what the fixed costs vis the non-fixed costs, if you should call it.
No, not quite. You're missing the principle. Activity-based costing, what are you doing?
You're getting the costing per segment, like per activity that's happening in the company.
That's better. So it's a cost allocation exercise.
Oh, that's what we say, cost allocation. That's the word.
Okay, do you agree you've got two different departments here, right?
Yes.
Clothing, retail, healthcare. Make sense?
Yes.
This is part of the same company. Do you see that?
I do see that.
There are going to be certain costs that you may have to allocate to each of the different departments. It's like a cost center, basically.
Right.
Happy with the
That makes
interpretation?
sense. Yeah, very happy.
So you're taking what's given in the question and you're allocating, okay, certain costs. Remember, fixed costs are going to be covered for the entire company. Do you agree?
Yes.
You can't assign that cost to the clothing or the healthcare because it's the entire company, but you have to absorb those costs somehow. That's why there's a cost allocation here.
Oh, that makes sense. I understand. So you'd still take those fixed costs and put it to a like to a certain segment within the company as a whole.
Yeah, you have to allocate. Remember, each company, or not each company, each part or each area, each department or each business unit needs to absorb a certain amount of those costs.
Right.
Because remember, fixed costs are tallied by the entire company, but those fixed costs could relate to different departments. Because remember, they said here, you're looking at profitability for each of the clothing and healthcare departments. Do you see that? The segments.
Yes.
Okay, so you've got a retail business and you've got two business units. You need to differentiate between the two in terms of profitability.
And
which area of the business is actually making money?
Right, 100%.
I think yesterday when we looked at something similar, I think we spoke about, what is it? Was it like social media and radio or something, I think? If I think back to yesterday's.
No, that was a different one.
That was different.
The one we did yesterday was we did the...
Well, the ABC costing.
It was the ABC costing was, remember, we did the rent, electricity, and insurance.
I remember the floor space and stuff, eh?
That's it. That's it. Staff members, floor space, etc. Yeah.
All right. Remember that example? It's very, very similar. You're taking costs and you're allocating it to the different business units.
100%. 100%.
As long as you understand the context, then it's actually quite easy to do the workings. Do you see how I'm trying to get you to see the light when you get a question like this? You need to understand what's being asked.
100%. That was one thing that I came out last night with, which I'd never come out before, which was understanding really what they wanted of me before even trying to attempt it.
Yes.
And before I knew the kind of what they wanted, but I wasn't 100% sure. Like, I walked out a little bit with that more confidence of like, I know what they want from me. Like, I know where to plug it in. And now that I know what they want from me, it's like so much easier to just do the calculation. Yeah. That's what they want. They're not trying to trick me.
Yeah. Just on that point, I must compliment you just in terms of your preparation, because I wasn't sure what to expect, because sometimes like you get different students, and sometimes you get students that don't go over the content. But what I remember you telling me is that you actually went to the content very well. So theory-wise, like you know your work. It was just basically what you were saying. You just didn't know when to apply what and how to do what working, or when to do what working. So I think if you've come to that realization, that's a good thing, eh? That's a really good thing.
Yeah, 100%. Well, thank you. You got me there. I appreciate it.
Yeah, no problem. Yeah, it's a pleasure. So I'm sure it's quite obvious to see what you're doing here, hey?
Yeah.
Okay, but now the challenge is, all right, getting the figures. All right, so because you've already answered the question, I'm just going to scroll down and just see what they've given you here. Okay, so there's the answer. All right, let's go through each of these separately, and you tell me how we're going to get the amount. If you struggle and you can't get it, then I'll help you. Okay.
Perfect.
All right, let's try. Okay, so let's go back to the beginning. There is a little bit of information here. This is worthwhile reading. Remember, in your exam, you want to try and maximize your time. So number one, you got that right. Get the context, understand what's being asked. The nice thing about this question is they gave you a template, a layout to follow. So you would have had this, but obviously this would have been blank, but this should have been given, and this should have been given. So even if you didn't pick it out from this, hopefully that could have guided you somewhat. Does that make sense?
Yeah, exactly.
Okay.
Exactly.
Don't
Yeah,
forget,
100%.
what do you compare your cost to always? We spoke about this yesterday. What do we compare cost to? Come, if you're running a business, what are you going to compare your cost to?
Your expenses?
Well, the cost
total
would be
cost
the
to your
expenses.
profit.
Yes,
Yeah,
to
to your
calculate the
profit.
profit. So you need to have income, and you need to compare that to the expenses. In other words, revenue versus cost,
Expenses.
basically.
Yeah, exactly.
Okay, so just remember, in a question like this with ABC, ABC is just looking at the cost aspect of the question. Don't forget about the revenue aspect of the question, eh?
Fine.
Okay, you need both to make a decision on which business unit is doing better. Make sense?
Right.
Okay,
Definitely.
so if you read this top part, okay, what does this top part address, or what is this covering?
Well, I'm going to read it. Can I read it?
Yeah, of course. And then tell me your thoughts.
Barton Limited, a Cape Town-based company, provides a distribution service for clothing and healthcare retailers. Fine. For performance assessment purposes, the company segments its clients by industry sector, and we know that those are clothing, retail, and healthcare. Fine. The company needs to understand the profitability of the two of the segments of the clothing and the retail, and clothing retail and healthcare retail. The average contribution per clothing retail client is 15,000 Rand, meaning every client contributes about 15,000 Rand for clothing and 17,000 Rand for healthcare.
Do you understand what that means? When they talk about an average contribution, what are they talking about? Do you know?
The average amount that they'll spend in their
Is it spending?
segment.
Is this revenue or is this costs?
Average contribution per clothing retail client. Spending.
No, it's not spending. A contribution is the actual revenue part, the profit part, the income part. That's why I reminded you about this, revenue and costs, because you need both here. All right, so the first part, if you read this, all right, average contribution, but if you go, there should be a note somewhere in your study guide talking about something like a marginal contribution or a contribution. So contribution is basically looking at that additional revenue or profit that's generated for every sale of a particular product. So in this case, they're saying that the clothing retail client or the business unit, okay, the segment is going to bring in 15,000. Okay, and the same thing
per
for
client
the
that it
healthcare.
Is it per client that it has?
Yes, per client. It's a contribution per retail store client.
Oh, fine. So if I could just jump ahead for 1 second, totally like out of sync at the moment. But if you look there, it said clients. So for the clothing retail, meaning 1,800, you would times 1,800 by 15,000, and your 1,950 by the 17,000.
Yeah. So what do we get if we times that? So
and that would be your income.
Yeah. So the contribution. We had two here. Hey, what is the first one? Clothing
and healthcare.
Okay, so this was contribution. This is contribution per client times number of clients. Does that make sense?
Yes.
So you just read 1,800 times 15,000. Okay, 27 million. Okay, 27 million is the contribution. Do they show that in the answer? Let's just check. Where is it? Yeah, here's it there. There we go. It's on the next page.
Oh, nice.
Okay, this is the revenue part. This was the cost part. Do you see they're two different things?
Yes, 100%, 100%. No, I
Obviously,
understand. No, I get that, 100%.
obviously, after you've calculated the cost, then you're going to determine the profit. The profit would be the difference between your income or your revenue versus your expenses or your cost. Do you see that?
Yes,
Okay,
100%.
that's important to understand because this is looking at which business unit is doing better. Okay, and then you also said
Was
1950
the what
times 17,
times by the 17,000.
and that should give you the same figure as this one. Yes, there we go. See,
Yeah, spot on. That's
this
awesome.
this is the revenue. Make sense?
Yes.
Okay. Be careful,
True.
the costs are separate. That's where your ABC comes into it.
Fine.
Okay,
That's where you're going to
ABC
split it.
costing is just looking at your allocation in terms of fixed costs to
How much
specific
the business
departments.
spends. Right.
Well, remember, the business is going to spend, I'm sure you've probably heard of direct costs and indirect costs, right?
Yes, for sure. We even did 1 or 2 yesterday.
Good. So here in the clothing retail store, there could be certain direct costs. These are direct costs. A fixed cost, this is an indirect cost. Does it make sense?
Yes.
This needs to be allocated to those areas in the business.
Fine. That makes sense.
Okay. Is that all right?
Yeah, 100%.
Okay. So having read this top part, you've got everything. Now you look at the cost. So let's check if you can do this. How do we get the carton packaging cost? Can you give me the working? You've got the answer here. We'll check if the answer is correct or not, but you need to tell me. You practice. How am I going to calculate this figure?
Okay, so the carton packaging would be obviously connected to the number of cartons, which is above, which is the 38,000.
Okay, so
For
give
the
me a
clothing
working.
industry.
Yeah.
So I would say that it's that for, hang on, let me just see, 1824, 1,824 is a total number. Cartons, cotton packaging, 38,000. Okay, sorry, that's one thing that's just confusing me. If I could just jump in. On the top, next to healthcare, it says the total for the company.
Yeah. So what does that mean?
Well, meaning that there's another segment that's also obviously using, let's just say, carton packaging.
No. Total for the company, the whole company. So obviously, remember this total for the company is everything. Does that make sense?
Right, which means there's something else that's also using packaging that's not in the clothing and healthcare.
Yes,
if you add
but we're
clothing
not
and healthcare
analyzing
together,
the other. We're not analyzing the other. We're only looking at the clothing and healthcare. So the
yeah,
packaging
100%.
would be
I just wanted to confirm
it
that.
would be a portion of the total, wouldn't you say?
Yes.
It would be a proportion of the total. Agree?
Yes, exactly.
Okay, don't worry about the amounts not adding up because you're right. There would be another department, another segment that we just don't have here. But that's not going to change the working because you have everything you need. You have the allocation to clothing and you have the total for the whole company and you have the fixed cost that can be allocated.
Okay, cool. I'm not going to get confused between them.
Does that
The
make
way I do
sense?
it is that it does make sense. They spend 1,824,000 rand.
How did you get that? I want a working. Remember, this is the answer. We need a working to get the answer.
Oh, sorry, that's why I was getting confused. Sorry. Look, I was looking at it wrong. I forgot that was the answer. Sorry, going up. Then I've got it. The carton packaging under the fixed costs is 4,540,800. That number divided by the amount of cartons in the clothing retail, which is the 38,000.
Divide? Do you want me to divide?
Yes, that's what I think.
No, you need to times, multiply by 38,000. divide by the total 94,600. This figure is important. This figure
okay.
is important.
Sorry. Yes.
And this figure is important.
Got it. I got it. Okay, I got it. In my mind, I would do it 4,540,800 divided by 94,600 to get how much it costs them per thing for the whole company. That amount times by 38,000 would give me what the cost for the clothing retail is under carton packaging.
Make sense?
Yes, 100%. And then I could take
So
that
do this
same
one.
total. Then I could take the total.
What's the
I do
healthcare?
that same amount. I do the four. So I do the 4,500 and 4,550,800 divided by 94,600, and that answer times 24,500.
There we go. Okay. Do this one. Shelving.
Deliveries, shelf packaging. So I would do 663,000.
No, that's the answer. These are answers. Don't look at the answers.
Sorry, I'm confusing myself. The 1,564,000 divided by the 18,400 times 7,800 or times 4,600 for healthcare.
There we go. See, you got that figure?
Okay.
And the other figure is going to be 46.
Times 4,600.
There you go. Make sense?
And then we also 100%. I think we missed out deliveries. Can we just go back to the deliveries?
Yeah.
The deliveries would be 14,888,000 divided by 62,000 times by 23 or times by 17,800. That one's times 17,800.
Is that right? Deliveries? Yes. Yes, there we go. You're getting the hang of it now. Last one. Account management.
Fine. What is 1,200,000 divided by 2,000 times 620 and times 440. Okay, I've got it.
Make sense?
Simple.
Okay, that was this one, yes, and this one, yes. Good. Okay. Happy with that?
Then, yeah.
All right, I see there's still admin cost allocation, this one. I don't know why they make a mistake here. Do you see the error?
Yeah, what's that little, there's a yellow box.
I don't know. You sent me this file. It had these
yeah, I think
highlights in here.
So I think it's their corrections to mistakes. Yeah,
it's okay. There is a comment here. Errata. Each one is 1 million less. Do you see that?
Yeah.
Okay, so somebody did correct this actually, eh?
Yeah, it's I think it's the people who marked the memo.
That's good. Yeah.
It wasn't me.
Oh, I thought it was you, but if it's someone else, that's fine. But yeah, you still need to add this to your answer, eh? Yeah.
Right, exactly.
So this needs to go here, and you're going to show the 2.6 and the 1.75. Make sense?
Yes. Okay. Yeah, that's awesome.
Right.
And then you
you'll
add them all up to get your total costs.
And then obviously,
minus
profits. How do you get profits?
You do total costs minus
revenue minus total cost, not so?
Oh, yeah, exactly.
Okay, revenue. Revenue minus total cost, and then you get that. Okay, you could use a percentage here as well in terms of the total. If you worked out the total, okay, you could have worked out the total here. Did they want a percentage? No, they didn't. Profit per client, okay. Did they ask for that though? Prepare the customer profitability analysis for each of the clothing retail and healthcare retail segments using ABC. Okay, they didn't specifically ask for this, so that's a little bit
Yeah.
of a red flag.
Or it did say, just underneath that said a suggested layout is provided below. So I think this is
Oh,
the suggested layout that would come in an actual
fair
exam.
enough.
So it would
Fair
say,
enough. Fair enough. So if they gave you this in the suggested format, then obviously you would do it. So yeah. Okay, so even though it wasn't
you
asked for in the
literally just take
question,
that 16 million.
yeah, even though it wasn't asked
Yeah.
for the question, but it was given here, then you would do the calculation. So how do I do this calculation? How do I work out profit per
I would
client?
do 16 million. That's 16 million amount divided by my clients, 1,800.
Yes. Good. And then this one?
And 1,950.
Good. Okay, it's probably going to be a bit different here. Yeah, it will be because, oh, see, they have put the corrections in. Do you see that? Okay, this memo is actually
Yes.
better than the other one. Yesterday's memo didn't have these little things, eh?
Yeah, exactly.
Okay,
Yeah,
so there you can see the correction is correct. There, 12972, 12972. It's good. You see that?
Okay, brilliant.
Okay.
100%. But yesterday we spoke about that we should always go down to a percentage because then we can see, it could be that you're making a bigger profit, but you've got more costs. Would you have to break that down to this as well or no? Because we just want to see the profit per client.
Well, in this case, if you want to go to percentage, then you have to use the total as well, hey?
Oh, fine.
Because remember, this is clothing and healthcare. It's not the total. You can't add these two together because this is not the whole
fine.
business.
So between healthcare and clothing, we can obviously see that healthcare is way more profitable.
Well, and on a per client basis, yes.
Right, obviously. On a per
Okay.
client basis, but it could be that you have more clients on another one and therefore we have a bigger profit.
Possibly,
It happens to
yeah.
be not like that in this case, but
Yeah, well, if you think about it, clothing, there is probably a lot more clients in terms of clothing than healthcare, perhaps. But remember, it also depends on the costs, eh? The costs here were a lot higher than there.
Yeah.
Yeah. So you can't really make too many deductions based on this because you don't know more about the business.
Right.
Yeah, but this is just the workings behind it. In other words, trying to get the right arithmetic to make a deduction based on what we have in terms of revenue and costs.
Cool. That's cool.
Okay. Happy with this question?
Yeah, very actually.
All right. Next one. What is this one looking at? Okay. Again, you do the
Question
exam
4.
technique.
Fine. So what they want from us is to explain using a detailed example and show how changes in price may affect the quantity. Motivate how security trading can use price management of the service to increase revenue and gross profit.
Theory question, right?
Yeah, comment on your calculations using the results to the service brand's equity annual survey. I don't know if it's theory because it says using a detailed example.
Yeah, but it's theory based because the scenario is limited in terms of scope. What do you have here?
Not much at all. We just have that offers a computer package to assist investors. It's priced at 200,000 Rand per month. Has a price elasticity of the model 0.5. And must use a gross profit of 50%.
So exam technique, what should we do?
First, well, we've now read the actual question.
Yes.
We've
Okay,
read
so
what they've required.
if the question gives you information, you need to put that information into your working. So what is this representing?
That is price at 20,000 Rand per month is revenue.
Yes, the selling price.
Yeah.
Okay, selling price. This is selling price for what is the product here? It's a
It's
computer
a computer
package.
package
And is this per
for
unit? No, this
investors.
is per month.
Well, yes, per month, per package, it looks like.
It's per month. Where does it say per package? Oh, offers a package. Yeah, that would be fine. Okay, so selling price per month, 200,000, okay, per package. All right, and then what else do you have here?
The price elasticity is 0.5.
Price elasticity of demand, hey?
Is that
Okay.
difference to?
You get price elasticity, you get different price elasticities. This one is for demand, so you need the right equation. I just want to open up yesterday's file just to get that equation. Here's it. Okay. All right, you need this, eh?
Yeah.
Okay, so what is the price elasticity of demand? 0.5.
5.
Does that make sense?
Yes.
Okay, so price elasticity of demand, 0.5 as the actual value is a percentage change in quantity demanded over a percentage change in price demanded.
And percentage is a very big.
It is very big. Yeah,
thing.
Percentage is important. You need the percentage because remember, this is
Right.
elasticity of demand.
Right.
Okay, so then what else do we need to do? Explain using a detailed example and show how changes in price may affect quantity. Okay, so we need to show a change in price. So we need to show two prices.
So just quickly, in my exam, I've got the exam in front of me, the actual printed one. And it adds in something that didn't have in the question there. It said, for your calculation, use a gross margin of 50%.
Yeah, this one. That's a separate question.
No, mine actually came part of the explanation, part of the actual.
Oh.
It said, has a price elasticity of 0.5, and then it says, for your calculation, use a gross margin of 50%.
Okay, well, if it's a gross margin, then you can work out the cost of sales.
So this question I got stuck on because when it gets to the question, say, explain using a detailed example and show how changes in price may affect quantity, I was unsure of what they required of me to start off.
Okay, well, that's why we're discussing it. We're doing it. So we just read it. Okay, it said explain using a detailed example changes in price. So what do I need to show? Original price and new price, not so?
Okay, cool. Yes.
Motivate how security can use price management of the service to increase revenue and gross profit. So what do we need? Revenue, which is sales, and then we need cost of sales, which gives us gross profit, not so?
Yeah.
Right?
Agreed.
Okay, so what is the gross profit margin? Gross margin or gross profit margin is 50%. Let's add that here. Gross profit margin is 50%. So what does that mean? That means gross profit over sales is 50%. All right, do I have the sales? Well, I have the selling price. This is per unit, per package. So I'm not going to use multiple packages. I'm just going to use one. Do we have to use multiple packages? Did they say that?
No, it doesn't say.
No, it just said the change in price. So that's fine. So we can just use one package. So if I sell one package, so one one package sold, what would the cost of sales be? Well, the gross profit would be 50%. So 50% is a gross profit over sales. So we need to calculate that. If I solve for gross profit, what would that be? Take 100 that side, so 50%. Let's just change this to 0.50. Okay, and then let's solve for gross profit. So gross profit is going to be 0.50. Take 100 across, will be divided by 100. And then take the 200,000 across, will be multiplied by 200,000. Is that right? 50%. Oh, percent, sorry. 50%. So 50%. 50%, that's too small. It can't be so small. Yeah, that's better. Okay, because, all right, revenue is 200,000. Okay, you can't have 1,000, so 50%, that looks right. Okay, that should work. Okay, that looks right. Okay, revenue minus cost of sales gives you gross profit. That looks correct. Okay. Does it make sense?
Yeah, it does make sense.
Okay, so now the new price. So again, one package sold. What is the new price going to be? Price elasticity of demand is 0.5. So this is something that we need to provide for. Okay, change in the quantity demanded divided by the change in the price. Okay. Show using a detailed example how changes in price may affect quantity. Okay, so let's increase the price by 10%.
Can you, if they don't give you an amount, can you just make it up?
You'll have to, because they said show using an example. So you're creating your own example.
Okay,
it shows
cool.
how a change in price will affect quantity. Do you see that? There's nothing else here. You can't use anything else here. The only thing you've got is 0.5 and 200. Do you see that?
Yeah, 100%.
Okay, so change in quantity and change in price. I'm going to use change in price. So assume a 10% change in price. Okay, so that means if I sell one package, okay, the price is going to go up to
1,000 times by 10%.
Okay, make sense?
Yeah.
Okay, so 0.50 equals percentage change in quantity demanded,
which would be 200,000 minus 220,000.
So times by 10, so 0.5 times 10 is 5, right? Yeah, so 5 equals percentage change in quantity demanded. So that'll be 5. So it's 5%. So if I assume price changes by 10%, that means the quantity demanded will change by 5%. Do you see that?
Yes.
Okay. All right. And we need to motivate how increase revenue and gross profit. Okay, so the revenue has increased by 10%.
10%.
Okay. The cost of sales. Cost of sales. Did we have a cost? Yes, the cost was half of it. So that would have been
110,000.
Okay, and the gross profit same. All right. Okay, so this is the new gross profit, and that's the new cost of sales. So the question said, motivate how can this company used price management of the service to increase revenue and gross profit. So to increase revenue, so this one, and to increase gross profit, so this one. So the answer would be they need to increase the price, because if they increase the price, we increase the price, that led to an increase in gross profits.
Oh, nice. Yes.
So increasing price here would lead to more gross profits. Let's see what they've got. Okay, allow students to use their own words. Example needs to be correctly calculated and show increase in revenue and gross profit. Okay, we've done that. We've shown the increase in revenue and the increase in gross profits. With correctly calculated quantity demanded decrease. The quantity demanded, we showed, it increased by 10% and then the quantity demanded was 5%. Okay, we didn't talk about the decrease in quantity demanded, but we just spoke about the 5% being less than the 10%. Except alternative calculation. Okay, so you can use any calculation. Do you see that?
Yeah.
Okay, the example answer is provided below. Okay, let's see what they did. A price increase will increase revenue and gross profit in the example. Okay, yeah, so we've already we spoke about that. We said that the two will increase, right? Yeah. That's fine. Yeah. Okay, in the example, a price increase of 20% is used. Okay, so they used 20%. I used 10%. So mine was 10 and 5. Theirs is 20 and 10. Do you see that?
Right. Yeah, 100%. But it'll give the same. I mean, it's the end of the day, it's the same.
It's basically the same, yeah. So I don't think they're going to worry too much about what amounts you use here, as long as you use the correct values. Maybe what I could have done better here, instead of looking at one package, I could have looked at a few. I see they've got a quantity column here. Do you see that?
Yeah, I do see that.
Yeah, so I think I could have added a quantity column. Okay, just to show an additional column with the profit, but you'll get to the same like answer here in terms of revenue and profits increasing. Okay, is that right? That's more a maths question, actually. I think.
Yeah, that makes sense.
All right, this looks like a theory question, hey?
Yeah, it does, definitely. I mean, there's a theory mixed with maths. I mean, so it's not like straight out.
What does it say? Read it. Tell me your thoughts.
Oh, B. Oh, sorry, I thought you were talking about A. B is pure
okay, are you
theory,
happy with A? Are you happy with A? I thought we were okay with A.
I'm very happy. Yeah, I'm very happy with A. Very happy.
Okay, so A is fine,
B says choose 5 non-price factors and advise on they are likely to affect the price elasticity of demand of the company's services and what the company can do to exploit or mitigate these factors. So yeah, this is pure theory. They've got it in our workbook.
Yeah. Do you need me to go through it, or are you happy with theory? Can I leave theory to you?
No, I'm happy.
Okay.
Yeah, please leave theory.
All right, here's the next one. This is question 4 now, hey? Okay, this is good. Right, looks like you're starting to get the hang of the exam technique, hey? It's good.
Yeah, absolutely. It's funny, yours is question number 4, mine's question number 5. Maybe they made a mistake somewhere, but...
Oh. Yeah, I'm just going down. I'm just going through like question by question. Okay, that was the first one. That was the second one. Yeah, that was the third one. Yeah, this is 4. Yeah, this is 4.
Yeah, but it's cool. Same thing.
Okay. All right. Thoughts? Tell me.
Okay, so the first thing it says is that you're requested to assist in the marketing team to calculate the following things. The discounted cash flow valuation based on the information provided.
Easy question, eh? They've done the table. Remember yesterday we had to draw up this whole table. Do you remember that?
Yeah, I do remember that actually.
Okay. What are you going to discount? Cash flow, right?
What? Well, I'm not understanding what they're asking me in this question.
They said calculate the discounted cash flow. So what are we going to discount? The cash flow.
Oh, we're just going to let you, yeah.
So grab your calculator and discount the cash flow. So in other words, this line.
When they say discount, what does that mean?
Discounting means taking amounts back in time. Discounting is used in time value of money.
Fine. And it's just, so you just do the calculation.
To move amounts back in time.
So what amount are we going to move back in time if we're going to, in theory, work out the net present value?
The cash flow, yes, the cash flow. They said discounted cash flow. Calculate the discounted cash flow. So the cash flow is there. That's the future cash flow. We need to discount it back in time. So NPV. So it's actually back to what we had here. Time value of money. It's basically this, a timeline. So we had minus 45 million, yeah? And then you've got all these figures.
Just 45, 6, 4, 4. Oh, wait, I think this was actually what we calculated yesterday.
No, I don't think so. It looks different to me.
I just remember that. 644444.
It could be the same. I'm not sure. I can't remember the figures, but it looks different to me. But you can try it and see if you get the right answer. Use your calculator, see if you can do time value of money. What is the ratio?
I got the answer, 65,931,988.37.
Okay, same as this, eh? Happy.
Yeah.
All right, so this is the time value of money. Solve for NPV using the calculator. Okay, next, what does it say?
A calculation of the sensitivity. So now I'm requested to calculate the calculation of the sensitivity of the forecast to labor costs.
Forecast to labor cost. What does that even mean? I think they're missing a word here. The answer says forecasted sales. The word sales needs to be there. Calculation of the sensitivity of the forecast to the forecasted sales to labor cost. That makes sense.
So imagine I got an exam, I had no idea what they were asking of me.
Yeah, I don't understand what they're asking either. But if I look at their working, then it makes sense. Okay, you're comparing price sensitivity. Remember, price sensitivity is looking at a change in something compared to a change in something else. Does that make sense?
Yes.
Yeah.
100%.
So
meaning if you I don't know, like let's say you're a leather manufacturer,
yes,
and skins cost more, now obviously your price and everything is going to cost more, and how it's all going to be affected.
Yeah, well, yeah, so sensitivity is how much will the price of something change in comparison to something else.
Right.
Okay. Yeah, so the wording of the question is not good. But if you look at the answer, they should have added that here, the sensitivity of the forecasted sales to the labor cost, because you're analyzing sales in comparison to the labor cost to determine how sensitive the changes are.
Fine.
Okay. Yeah, I don't like this question because it didn't explain what they wanted you to calculate. So I'm going to use this figure. And I'm going to use that figure. Okay. So you've got those two figures there. Are they the same amounts? Yes. And then the total labor cost. Remember, total labor cost is going to be labor units or cost per units. All right. Where's the units here? See, they should have even have told you this was units. That's also a problem, eh? Sure. Yeah, students are definitely going to ask questions about this one. Okay. forecasted sales, they should have told you this is in units, not so?
Yeah. Now I know why they don't give us back our exams.
Yeah, it's bad because it looks like they're multiplying here. Let's check that. Okay, so what is it? 216,528, 215,671, 214,010. And then the labor cost per unit was 220, 238, and 257. So then the total, this times this. Are they multiplying? Yeah, they are. Okay, do you see that?
Oh, it's a little bit slow. Oh, they popped up. Yeah, now I can see.
Yeah, they're multiplying. See, total labor cost, multiply, multiply, multiply. And then once they've got that, you need to work out the price sensitivity. So you're going to be comparing that, okay, to the discounted cash flows. So you're going to have to discount that back in time. Did they do that? Yes, they did. Okay, there you go. Net present value of all of those amounts.
So how did you figure out that they wanted you to go back in time?
Because you're forecasting the future cash flows. Remember, this hasn't happened yet. This is in the future. It's a forecast. It's not a reality. And you're comparing
Yes,
it to
agreed. So how
today,
do
the
they know that they wanted
sensitivity.
you to do NPV again?
Because these are future cash flows. You can't look at 2023, 2024, and 2025. You need to look at one amount
Without doing an
representing the
NPV.
total. For
Fine, and that
example,
would be your
here,
NPV.
what did we do? We discounted all of that back in time because you can't look at them in isolation because they're all different points in time.
Fine. So you'd have to get one total amount for all of them.
Yes, yes. Okay,
Fine,
you've
so that
got
would be the
the
same.
amounts,
Okay,
but they're
cool.
all at different points in time.
So you need to then put it as one point using your
Yes.
NPV.
Yeah. Okay, see, there's errata here. I don't think this is right either. The discounting doesn't look right. I see there's a comment here, errata, see? And then here, yeah, errata, see? Okay, let's check it. Do the NPV quick. Let's practice for you on your calculator.
Okay, doing it there. Yeah, all. So we said 0 CFJ1. We said 47,636,160 NPV. CFJ 51,329,698. 55,000. 55, 0570. And that's 14 hour on MPV. I got negative 118,406,459,25.
Yeah, so that's correct. That NPV is right then, eh? That's fine.
Yeah.
So then
Yeah.
the NPV, what did you have here? This was 65. So
Yeah.
there's a difference of 35,000 something. See, they're using the wrong figure
Well, the
here.
actual NPV is 60. Yeah, so that's 65,931, not 35,000.
Yeah. See that? Okay, but yeah, as long as you've got the right figures, so it's really good. Your number crunching on the calculator is good, eh?
Thank you.
Your NPV is
Appreciate it.
perfect. Yeah, it's just the discussion now. Yeah, you're not going to use the 35. You're going to use what you had calculated previously.
65.
Okay,
Perfect.
because they want you to calculate the difference between the two. that right?
Fine. So then you would take the actual NPV flexibility.
Yeah. And divide it
And
by
the
what you
minimum. So what you
calculated.
take the 65 divided by the 118.
Correct.
Fine.
Yeah. So they've
Cool.
shown there's the correction. Yeah. Okay.
Fine.
They just used probably
cool.
a different NPV. This is probably a different question. They changed some of it, but I don't think they updated this last part.
Fine.
Okay, because remember here you're looking at the change. In other words, what you're forecasting to labor costs. You're comparing the forecasted sales to the labor costs. Okay.
Fine.
All right. And then this one, what does this one say? And as is 10% best case and 10% worst case. Where's the question? Is this the question? Wow, that question is...
You requested to assist the...
This question is very confusing. I don't know. To me, this is like scenario analysis.
Yeah, that's exactly what it is. It's scenario analysis.
Yeah, but it's not a good question. They should have worded this better. It's not very good. Yeah. But at least we can see. So as is what we had earlier. This is it, hey? Agree? That's as is. Agree?
Yes.
Okay. Best case. So would you expect it to go up or down? Best case.
Up.
Up. Remember, you want more cash flow. Agree?
Yes.
Okay, so let's check it. Do we have those figures? Yeah, we do. We've got them up here. Okay, so scenario analysis. Best case and worst case.
How did we get those figures up there again? Where did we get it from?
These figures came from the question.
Oh, fine.
Make sense?
Oh, they were the ones over there that said the net cash flow.
Okay, so if you want best and worst case, you're going to have to multiply these amounts by 10%. 44. No, was it 44? 45?
Where do you know the 10% from?
They gave it to you in the question. They gave it to you in the question.
Where did it say 10%?
Yeah.
One sec, your computer's a little bit slow, so I'm seeing it only a few seconds after.
Let me stop sharing and then reshare. Right, can you see it?
Yeah, I can see your screen now.
Okay. Yeah, so it said 10%. Worst case 10 and best case. You see it? It was in the question.
Yeah. Yes, fine.
Okay, so all of these amounts multiply by 1.10.
Oh, that's what it says in the question, 10% best case and 10% worst case.
Okay, so those figures look correct. And then worst case, it'll be less than. So less than, we're going to take out 10%. So you're going to multiply by brackets 1 minus 10%. So basically 0.9. Okay, are those figures correct? Yes, that looks right, that looks right, that looks right. Yeah, so it's in line with what they gave. And then use the same WACC. They gave you 14% WACC here, and then you had to work out the NPV in those best and worst case scenarios. So best case, and then solve for NPV. Can you check these again? Check it with the calculator. You're good at doing NPV. Here's another two to calculate. Best case, do you get the same NPV, this one? And then worst case, do you get the same NPV as this one? Using those figures or using these figures, whichever one you're looking at. Either the ones that I've typed here or the ones on the solution. Just check it. Let's just check the NPVs.
I'm checking now. The next option is
Don't forget to put the minus 45 million, eh? Yeah.
Yeah, I did that.
Very good.
52, 803, 381, and then 55, 33, 80, 358. It was 40%. Looking for NPV 77 million.
Yes.
This is for 77,025,186,69.
Perfect. And then the next one?
Now we took 45, 1, 2, 3, 4, 5, 6 negative, and 4108 4 CFJ 43 2767 CFJ 45 276 838 CFJ 14 NPV 54 838790.
Okay. Happy.
Very, that's good.
Okay. Yeah, this paper compared to the one we did last night, the questioning is not as good. This question was problematic. They should have given more information. They should have described these questions a bit better. So yeah, not the best past paper to look at, but at least they give you a working so you can kind of see what they wanted you to do.
Yeah, 100%.
That one okay?
That one's good. Happy.
Okay, next one. Q5. All right. Okay, you go again. Exam technique. Let me move it down. Okay, required first. There's the required.
Using the residual income brand valuation approach, calculate the value of dynamic distribution and advise one-time logistics whether the acquisition is worthwhile. So we are doing a acquisition, like an acquisition equation.
No, we did one similar yesterday. What did we do yesterday? I think this was the first question yesterday we discussed.
Yeah, it was the first one. We called it, what do we label it? We labeled it
capital budgeting, not so?
I think so. I actually can't remember.
Okay, it's capital budgeting. You're looking at discounting future cash flows back in time. Hey, same as yesterday. Question number 1, I think it was.
Yeah.
All right. How many years did they give you a template? Is this the template they gave you? Template below. Yes. There we go.
Yeah. Round of the calculation. Yes, I make use of the template.
Yeah. So they want you to use the template. That's good. Okay. So at least they've given you line items. Okay. Let's talk about each of these and you can tell me how we get them. All right. So yesterday we had a similar question. Remember, income and expenses,
Just split into two. Yeah. Same thing, income and expenses.
Yes.
Yeah. Revenue and costs.
Yes.
I'm so ready for this exam. I want to just do it now.
That's good. It's tomorrow morning, you said, early, eh? 8 o'clock.
Yeah, 8 a.m.
Yeah.
8 a.m.
So you don't have to wait too long, but I wouldn't do anything tonight, eh? Don't cram. Rather get rest and then
No, I'm not gonna.
be like ready for it tomorrow. Don't pull an all-nighter and then try like do like 3 other exams and then you don't even get any sleep and it's going to go very badly. You need to do maybe do one more and then call it a day, but definitely sleep a bit early and then be fresh for tomorrow.
100%. That's my plan. I mean, last night I went to bed, I think it was like 11:30, and then I was up at 4:20 just to do a paper.
Okay.
So my plan of action is to definitely get to bed early tonight and then get a bit of sleep tomorrow morning and be ready and early for the exam.
Yeah, you need to be fresh for this exam tomorrow.
Yeah, absolutely.
Okay, and then that's it. Cash flow and then NPV, and then we've got everything. All right, so this is the template they gave you in the exam. So that would be pretty much what the answer sheet would look like, but just all crammed up together. I'm just showing it separately just so we can understand it a bit better. And then we've got the acquisition year, so that will be T0. Then you've got T1, and then you've got T2, the 2 different years. Okay, let's go back to the question. All right, there's a lot here, hey? Okay, so the first bit, okay, there's nothing really there.
Logistics. Oh, yeah.
All right, but it's fine. You read it, so at least we have context, and then you can tell me what's important here.
One Time Logistics is interested in buying a competitive company called Dynamic Distribution. The information of Dynamic Distribution made available to them is as follows. They said for the current year, the sales was 46 million. Oh, we're not going to read through that, all of that. Marketing expenses was that, operating was that, profit before tax was that, tax was at 27% to note, and then there's the net profit. So the additional information is as follows. One Time Logistics has a WACC of 13%, and the company is subject to a tax rate of 27%, which is what we said. In the year of the acquisition, One Time Logistics expects marketing expenses related to Dynamic Distribution to increase by 25% and operating expenses to reduce by 20%. Thereafter, both expenses are expected to grow annually by 7%. So that's like a really full question. It's actually quite nice. In the marketing expenses in acquisition year, we're going to take 9,200,000 and times that by 25%.
Nice. Yeah. Okay. Do you see how good you are at identifying where things fit and like what to use this for?
Yes.
Okay.
So much. Yeah. It's like it works better.
Yeah. Read all of it and then we can go back and just plug in the values.
I think the company conservatively expects all revenues, costs, and expenses to grow annually by 7%. Company conservatively expects all revenues, costs, and expenses. Okay. In the current year, One Time Logistics will need to spend 15 million rand on management of the takeover. When it says current year, is that acquisition year?
Yes. Current year, because that's the current situation. Remember, this is a capital budgeting exercise. We are going to attempt to purchase this other business thing here. See, buying a competitive company. It's actually very, very similar to the other one we did yesterday. I think yesterday, what was the context yesterday again? It was, what were we buying? I forget the context.
Fruit juice.
Fruit juice. That's it.
Was buying another company called
100% Best Fruit or something, eh?
Yeah, exactly.
I remember now. That's very similar, hey? Yeah.
Yeah.
Okay. All right. Did you read through all of it? This you missed.
In the current year, One Time Logistics has negotiated to pay 400 million for Dynamic Distribution.
Okay. So, thoughts. Let's get marks. What are we going to put in the table?
I'm going to start with
get the easy marks. Good exam technique.
Yeah. The first point. Let's go first point in the year of acquisition.
Okay, so where you want to put an amount in? Come, tell me.
Oh, I want to put it in the.
Remember, we have this template,
increase.
eh? So let's get marks.
Yeah, I'm going to tell you now. We're going to put it in the year of the acquisition. One time logistics expense, marketing expenses relating to our distribution to increase by 25%. So that's in expenses. Let's go expenses first.
Okay, what do you want to put in expenses? Which expense are we going to look at?
Let's use marketing expenses first.
Okay, how much is the marketing expense?
The marketing expense was 9,200,000 times 25%.
Times 25%? No, times 1.25, right?
Yeah, exactly.
Okay, aren't we increasing it by 25%?
Yeah, exactly. So times 1.25.
Yeah, just be careful. You said times by 25%. If you don't times by 1.25, you're going to get an incorrect amount, eh?
Oh, fine.
Have a look.
Yeah, absolutely.
Have a look. Times 25%? It's too small. Okay, that's way too small. Look at that.
Yeah.
Okay, remember, the question said increase by 25%. That's the important part. In the year of acquisition. Make sense?
T0. Yeah, 100%.
Okay. What else?
And then we're going to take now other operating expenses.
No, you can't jump around. Eh? You need to finish one line.
Fine.
You're looking at marketing, so what are we going to do with the marketing expense?
Thereafter, the expenses will grow by 7%. So we're going to take 1.11,500,000 and times that by 1.07.
Better. Okay, see, this is exam technique. You need to approach it this way in your exam. Okay, don't jump around. Look at one thing, complete it, and then cross it off. So you've done this, cross it off. Does it make sense?
Yeah. 100%.
Okay. All right. You were talking about operating expenses. That's fine. We can look at this one now. So
it reduces by 20%. So we're going to take that 6.3 million.
And times it by what?
And times it by 0.2?
No.
1 minus 20%.
That's better. See? Or 80%. Does it make sense? Okay, if you're reducing something by 20%, that means it's 80% of the whole, right?
Yes.
Make sense?
Yes.
Okay, then what? Finish the line.
And we're going to do times 7 times 1.07 times 1.07.
Okay, next.
The company conservatively expects all revenues, costs, and expenses to grow annually by 7%. So now we can look at. I want to just see one thing. You've got takeover fees. Oh, but that's not yet. Okay, fine. Now let's look at income. Let's move to income. We know that our sales is 46 million for T0. So let's do times 1.07 for T1 and T2.
Right, good. See, you're getting marks as you go, eh?
Yes, absolutely.
Right. What else?
In the current year, one-time logistics will need to spend 15 million on management of the takeover. So I would say that's part of takeover fees, maybe.
Yes. So what are you going to put there?
Negative 15 million.
Yes.
In T0 in expenses.
What else? Keep going. Now what?
Do you put the 50 million in brackets?
No, why? They're expenses. I've identified the expenses. They're all negative.
Right. Perfect.
Now what?
Got it. Now let's get total expenses.
How do we get that?
We add them all together, takeover plus marketing expenses plus operating expenses.
Yes. Okay. Now what?
Just question. Takeover fees is a once-off, am I right? It's not going to be times by 7. No, yeah, for sure it's once-off. Never mind. No,
What did the question say? In the current year, you will need to spend 15 million on management for the takeover. Yeah, that's it. It's only a once-off in the current year.
Yeah, okay, cool. Cool. Then we can get totals. Well, we've got the total sales income. So we can get, let's do profit before tax, which would be sales minus total expenses. Or
Yes.
total income minus total expenses. To give me the profit before tax. Then let's do tax at 27%. So we'll take the profit before tax and times that by 0.27. And then we'll take profit, and then we'll take profit before tax minus tax. Give us our net profit.
So far, so good.
And
now
then
what?
we can work out. Then we can. Where did you get that terminal? Oh, it's part of the thing. Then let's get our terminal value by doing our calculation. We'll use our PV formula.
Yeah, we're going to have to go back, and I'm just going to copy this again.
Yeah. No, I think it's that was the wrong formula, I think. Oh, you just used a different one.
Okay, remember it's an annuity, perpetuity.
Yes, exactly.
So it's a perpetuity. Remember, we're not looking at free cash flow. We're looking at just cash flow. So the payment would be representing the cash flow. Does it make sense?
Yes, absolutely. So we would have, for the terminal value, we would have 24,621,991 times by 1 plus 7% over the WACC, which is 13% minus the 7%. Then we'll have our cash flow, which we'll just bring down. So it'll from net profit, and we'll just add that last year. Yeah, those together. Then we can go straight into an NPV calculation.
On your calculator, yes.
I'm popping it onto my calculator immediately. One payment per year, and then it's 105.
What was the initial investment? Did they give you?
50. Yeah, it said one time it was negotiated to pay 400 million.
Okay, so negative 400 million.
Is that what it is?
Looks like it. One Time Logistics has negotiated to pay 400 million for the distribution. Yeah, there must be a initial investment. 400
Is the initial investment not the 15,000?
No, that was a takeover fee.
15 million.
That was a takeover fee.
Yeah, that was a takeover fee. You're right.
Okay. All right. Then you've got your cash flows.
To 400. 1, 2, 3, 1, 2, 3.
What is the rate? What is the WACC?
13.
Okay, nice. See if you can solve.
Okay, I'm doing it. 105 5800 CFJ 2301 1206 CFJ 4637 714 412. I'm not going to do comma 91. CFJ, we've got 13%. Our R, then we go into NPV. Oh, I'll get a negative.
You get a negative.
Yeah.
Let me work it out as well.
Could have done it wrong.
Okay, try again one more time.
Okay.
13%. Did you put the I in, eh?
Yeah. So
Okay.
it's 400 and 1, 2, 3, 1, 2, 3. Negative CFJ. And it's 10, 5, 5, 5, 8, 0, 0. CFJ. And it's 23, 0, 1, 1, 2, 0, 6. CFJ, it's 4, 6, 3, 7, 1, 4, 1, 5, 3. CFJ,
Yeah, I'm also getting a negative. I'm getting negative 51260,265. I think this 400 million mustn't be there because here they've got a positive NPV, eh?
So they maybe not using the 400 million. Maybe they
doesn't look like it.
Maybe they're going to ask. Maybe they're going to ask Maybe they're going to ask another question. Let's just see if they do.
Yeah, because they talk about the 400 million. I would put it in actually.
Maybe it's just because it says calculate the value of the dynamic distribution, advise one time logistic whether the acquisition is worthwhile. If we get an NPV that's less than 400 million, then it's not worthwhile for them. Because then they know that their future value is not going to be worth it. Like they get over here 394 million, so then it's not going to be worth it for One Time Logistics to take it over.
Yeah, no, that's correct. So you can, okay. So this actually isn't initial. This is not an initial present value. It's not a INP. Does that make sense? Okay,
yeah,
so
really what we're doing is we're looking at 10,555,800 CFJ 0, and then 23,011,206 CFJ 1. We're looking at 463,714,153 CFJ 2, and then we're looking at a 13 IYR, and then we're looking at MPV of, I got 394,070, 394,075,900.
Okay, so basically they didn't include the 400 here. They're taking it into consideration after you've done the NPV. Okay, that's fine.
Fine.
Yeah. Okay, so this NPV, so this actually isn't a net present. This is not an initial investment, eh? It's a negotiated price to pay. So because it's negotiated, I think it hasn't been paid. That's the assumption they're making.
Yeah,
it still has to be
that makes
paid.
sense.
Yeah, so we're comparing the 400 million
sense.
to the present value of all of this.
Cool.
Did you get the exact same figure, hey?
And I got slightly differently. I got 394,075,900.
Okay, so there might be some rounding somewhere. Okay, maybe in the answer.
I just didn't do.
Yeah.
Yeah, I just didn't put a 0 as CFJ 0. Is that fine?
No, you have to put a 0.
So maybe that's this. 1 second.
Yeah, put a 0 and then put all of these in.
10, 5, 5,
Does it make a difference? Let's check.
0. I'll tell you now. Can you excuse your mouse a little bit? 23, thanks. 011 206 CFJ 463 714 153 CFJ 13 Oh, mad. 348.
Oh, 348.
739.
It's a bit smaller
Yeah,
even.
348 739
Yeah.
734.
Okay. Yeah, so looks like
If I put a 0 before.
yeah, looks like the 0 shouldn't be there. So I'm just going to delete it. And then we'll just move that up.
Just use those.
Yeah, it looks like that's what they want you to use. Because this was the acquisition year. So T0, yeah, T0, T0, T1, and then T2.
Right.
So T0, T1, T2. That's better. Okay.
Very cool.
All right. And then that gave you the NPV, which was the same as what they had here, right?
Yeah, I mean, it was a little bit off.
All right. Yeah, that's fine. I think there might be some rounding here maybe, or some rounding there, depending on the rounding. The numbers look all the same. Oh, this one. See? That one's a little bit off, I see. Yeah, we've used 162. They've used 155. So this is not that's not the right. Yeah, it's just a little bit of rounding. It's just a slightly rounded off answer.
Oh, man.
Okay.
Very cool.
All right. Is that it? Wow, this was a shorter paper.
That was good.
Yeah. Yesterday we had 6 questions. Tonight we only had 5. That's interesting. I thought there was one more question.
Mine says 6. No, mine definitely says 6. So I don't know why it says 5 on yours, but I think they maybe combined. Go to the top again. Let's see.
But is that the end? Did your paper have more questions?
No, that's it.
Oh, okay. So that was the last question there.
Yeah, definitely.
Okay. All right. Let me save this file then. We still have time. Do you want to cover more? Do you want to end early so you can prepare for tomorrow? What's your preference?
I want to. I don't mind going through that other word one, but I haven't gone through it myself yet.
Okay. Which question?
I sent you that Word document.
Okay, let me just save this.
It was another past paper.
Okay, this was semester 2. Past paper 2. Past paper 2, save. All right, that's downloaded. Yes, okay. Let me go back and see. The Word document you said.
Yeah.
This thing.
That's it. I'm going to see if I did that. Yeah, I did it. I mean, I'm keen to go do a little bit more, but I don't want to run it. I'm feeling confident, so I don't want to run into a question that I don't know and then knock my confidence.
Yeah, do you have answers for this?
Yeah, should be there.
Where? I see questions.
One of those documents I sent. Yeah, one of the other documents I sent you is incorporates the answers.
Okay, which one?
Is this October? That one is. Yeah, this is October 2022, right?
I don't know. You'll have to tell me because remember, I was confused with those documents you sent through. I didn't know which one belonged with which one, so I just used I used the 2023 because 2023 everything was in one place.
Yeah, 100%. Give me one sec. I'm going to log in for you right now.
Okay, because I can open the other ones, but I don't know which one it is. What year is this one? Because I can see here it says
Final assessment October.
June 2024. This looks like this year. 29 June 2024.
Yeah,
Started
this
on,
is,
finish, time
yeah,
taken.
I've got it. Should I send it to you on WhatsApp or what's better? The one I sent you, it's called FM 303B Final Assessment Marketing Guide, October 2022. It's a PDF.
October 2022. Okay, I've got it. I've
Yeah.
got the PDFs open here. Here's it. Must I close this Word document, this one?
No, because, I don't know. Just let me check the marketing if it has the questions.
Yeah. This one.
Fine, but just, yeah, go down a little bit. Oh, yeah, you can just keep that open. Oh, I never realized that it had the questions as well there. Yeah, that's perfect.
Is it the same thing?
Yeah.
Okay, so can I close the Word documents?
Yeah, you can.
Okay. All right. Okay. Semester 2, 2022. Question 1. Yeah, there we go. Is it stop? Does it stop there? Yeah.
Cool.
All right, there you go. Okay.
Yeah.
Let me put another sheet here. Okay, go for it. Read the required, practice the exam technique. Tell me what's happening.
Where is the required? I can't see the required actually.
There's it.
Which campaign should cover it? Choose billboard or Facebook. So it's like one we did yesterday.
Correct.
So we are doing what's called I wouldn't call it cost analysis, but I would call it like which campaign would they choose? I would call it like differential costs or
No. Think about what are they asking you to do here?
they want me to see which is the best marketing campaign to go for that will obviously give them the biggest profit in a percentage. I just want to add that in.
Okay, remember we spoke about this yesterday when we were looking at radio versus social media?
Yeah, exactly.
So what did we do yesterday? What are we going to do today?
We're going to call it, well, what we're going to call it?
No. What is the approach going to be?
The approach is going to be
same thing as we did yesterday.
Yeah, revenue is income for both.
Correct.
Yeah.
And which two projects are we looking at?
Billboard and a Facebook.
Okay, and then? Now what?
Now we're going to read the actual question.
Yes. Okay, exam technique. So go for it. Practice.
The marketing department at Covered Insurance Company has to decide the most lucrative of two possible campaigns. Both campaigns will run for 4 months. The first proposal is for 2 billboards on opposite sides along the N1 highway 5 kilometers apart. Nice. Very descriptive. The design and production costs are 65,000 Rand for each billboard. So go straight to expenses of billboard. And we're going to do, let me just read the full thing, but we're going to basically do 65,000 times 2 of the times 4 for 4 months. The rental cost is 25,000 Rand per month So now we're going to have 25,000 Rand times 4. Underneath expenses, we're going to have a new one called rental. And then surveys indicate that 300,000 cars pass each billboard per month. Billboard per month. The probability of each person to purchase a policy is 0.2% of the 300,000, and the short-term policy duration will be of 1 year. Fine. After administration and admin fees, excluding the cost of the campaign, the insurance company earns a net margin of 300 Rand per policy. So in the income, we would have 300 Rand times whatever we work out to be 0.2 of 300,000. The second option is Facebook with a setup cost. So this is an expenses of setup costs of 72,000 Rand and a cost of 0.1 or 10 cents per view. It's anticipated that there will be 250,000 views per month. So we would do 250,000 Rand times 0.10 times 4. And then we would have the conversion rate would be in the region of 0.4%. So we would know how many people. A net margin on the campaign, excluding advertising, will be 300 Rand per policy. I mean, they just try to confuse you with net margin, but that's income.
Yes.
Meaning 300 Rand per person of the 0.4 of the 250,000. So now let's start plugging in some numbers. So if we go back to billboard expenses, because that was the first one, we had design and production costs costing me 65,000 Rand times 2 because there were 2 billboards. And that amount times 4 because it ran for 4 months. Then I would have 25,000 Rand times 4 under the rental cost. Um,
25,000 times 4, is that what you said?
Then, yeah, exactly. The screen's a little bit slow, but it's fine for now. Then, surveys indicate that 300,000 cars pass each billboard per month. Oh, wow,
Okay.
hang on. 300 cars passed each billboard, so that's 600,000
How many billboards
cars.
are there? There's 2 billboards, right? So mustn't you multiply this by 2?
Yeah, exactly.
Rental costs?
1 second.
That's what I'm asking you. Are you happy with this?
I don't know. Oh, no, yeah. A month for each. Yes, definitely. Sorry, definitely.
Okay, now we can move on.
Because it's, sorry about that. The surveys indicate that 300,000 cars passed each billboard. So 300,000 times 2 times 4. And then the probability of a person to purchase a policy is 0.2%, which means we take that total number and times it by, it's a 0.2% chance of that total. Yeah, so it's 0.2 times that.
0.2%. How do you write 0.2% as a decimal?
0,002. Nice. Yes.
Same as yesterday.
So, yeah, exactly. Times 0,002.
What else?
So 4,800 people are going to actually take it at 300 Rand each. So times 300 Rand. For the Facebook, we're going to have, so there's indicator administration of admin fees. And the insurance company owns a netting option. Fine. And the second option is Facebook-based campaign. Fine. It's anticipated that there's going to be sorry. The second option is a Facebook-based campaign, which setup costs are going to be 72,000 Rand times by 4. No. Yeah. No, it's not. It's just 72,000 Rand. It's not times by 4 because it's once off. And a cost of 0.10 per, so it's 10 cents times 250. There will be 250,000 views per month. So it'll be 10 cents times 250,000 times by 4. Yes, happy. And then we go to income. We're going to have 250,000. There'll be 250,000 views. We're trying to work out the revenue. We're trying to work out the people. So 250,000 views times by 4 times by 0.004 is the amount of people. And then the next one, we would have 4,000 times also 300 Rand. Giving us that. So we can see from there that now we can sum up the total expenses, which is for the billboard, it's 52,000 plus 20,000, 520,000 plus 200,000. Then we can have profit, total profit. Which is total revenue minus total costs. Then we can have profit, like the profit margin percentage. Which is, the way we'd work it out is the profit profit margin percentage is the profit minus profit. So let me try this. We said the profit margin percentage is, let me get this. Let me get it. I'll put this sheet right here. Is profit margin percentage? It's gross profit divided by sales.
Sales or revenue, yeah, times 100.
Sales. Is it divided by revenue times 100?
Yes.
That'll give you a gross profit. Exactly.
No, that gives you the profit margin, yeah. Well, in this case, it's not really gross profit margin because you've got other costs. It's not just cost of sales.
Yeah, so it's your profit. It's your. Oh, so it's not. It's your. So it's your net margin, really.
Basically, yes. Yeah. I'm just leaving it as profit because it's profit here. So profit margin.
Fine. So it's profit margin. So it's profit divided by revenue times 100. And we can see that Facebook is the way to go.
Yeah.
Because their profit's higher well, we can't get into. Oh, we can in theory. Their profits higher,
Yeah.
even though their costs are also higher. But
yeah, let's see what the answer looks like. Billboard costs. Okay, so production. What are your production costs? 65,000 times 2 times 4. They didn't times by 4 here.
that's crazy.
Design and production costs are 65,000 for each billboard. Okay, but you don't build you don't build a billboard every month, do you? Once you've built the billboard, you've built it, right? So theirs is correct. It's not per month, is it? What did it say? Yeah, it's not per month. The rental cost was per month. Do you see that?
Yeah.
So we need to fix your working. This was times by 4. I'm going to subtract that. Okay, asterisk, not per month. Right, you don't rebuild the billboard every month.
Yeah, it's true. It's true, but that's such a trick question.
It's fine. I'm just going to check and look at your workings and look at the answers. Rental, 2 times 25 times 4. That looks good. That was per month.
Okay, cool.
That was fine. Total cost, 330. That's correct now. Income, that looks good. Profits, that looks good. Okay, Facebook, production, nice. Viewing costs, nice. Total costs, good. Income, yes, 100%. Okay, profits, that minus that, same answer. Does the billboards would be the most beneficial option? No. The answer I don't agree with. I agree with your answer.
Cool.
We spoke about this yesterday. Remember we said it's the percentage, eh? Remember we said? All right, the bang for your buck, basically, right?
Yeah, 100%. But now we see two examples where they haven't gone to a profit margin percentage and they've just gone off the profit. And then they've said what the most profit. Do you think I should just copy them even though they're wrong?
No, follow yesterday's example. Yesterday's answer was much better than this answer. Even the structure here is really bad. Look at this.
Yeah, yes, but yesterday's example, they also didn't go down to a percentage.
Didn't they?
Let me just double check.
I'm sure they did. I think they did. I think they even asked for it, didn't they? Because I remember we worked it out. Didn't they ask for it? I can't remember now.
Yeah, I'm reading it now. It says they said which campaign should cleaning services choose, radio or social media?
Yeah, did they ask for profit margin? Did they ask for percentage?
I can't see it on my working. Yeah, I don't have the printed answers.
Must open up yesterday's one. Let's go.
Yeah, can you?
Let me find it. What was yesterday's one? Semester 2, 2023. This one, this page.
Yeah, exactly.
This one. Which question was it?
No, that was
today's.
No, it was semester 1. Yeah, it was semester 1.
Semester 1. So May.
It was May 20. Yeah, exactly. May 2023.
This one. Okay, what question number?
And it was question 4, I think. Let me check. Question 5.
Yeah, this one.
Yeah, that was it. Exactly. 2 different sales.
Yeah, see, look, they did.
They did go to gross margin. Okay, yeah. So I'm going down to gross margin.
Yeah, definitely. It's correct to go. You did it perfectly. Look at that. Look how good your working was. See, this structure is right. Follow this structure. The way we did it yesterday, do it the same way. Don't use what they did here. Where's it here? This is not very good. Yeah.
Yeah, I agree with you.
Okay, this was a much better answer. This answer that you did this whole thing on your own, basically, eh?
Yeah, I did. I was very impressed myself, actually.
Yeah, the only mistake was that because of the billboard being built. Just be
Yeah,
careful.
exactly.
Yeah, you're not going to rebuild
Yeah.
the billboard every month. It's just going to happen once off.
Yeah, makes sense.
Yeah.
Yeah, makes sense.
Okay. Awesome. Great effort. Give yourself a pat on the back. Nice one. Good effort there.
Thank you. I appreciate it.
Yeah. The structure's much better. You've got the exam technique. I think if there's one thing you've mastered is the exam technique. Even how you were reading through this question and how you were addressing, where was it? This one. And you were addressing the points separately, and then you were thinking about expenses and income. It's very good, eh? I was smiling while you're busy reading it. It's very good.
Oh, brilliant. I was also.
Nice. Awesome.
Thank you.
You're welcome. And like I said, I think you're even feeling a lot more confident about it. So I'm sure it'll go fine.
I am feeling confident. I'm excited about it. I mean, I'm nervous because I can't face this again. But
I don't think you'll need to
take on this challenge.
Yeah. Looking at yesterday and looking at today, I can see a big improvement. Yeah, it's good.
Well,
you'll be fine.
Thank you. I can't explain how much this helps.
Okay, I'm glad it was helpful. So yeah, like I said, try get an early night, be fresh and ready for tomorrow. And yeah, I don't think passing is going to be a problem. I think you could even go for a distinction, eh?
Yes, I would be so happy.
Yeah.
It'll be beers on me if I get a distinction. Okay.
Yeah, go for it. You can do it.
Absolutely. Thanks, Anthony. I appreciate everything. I really, really do.
Yeah, you're very welcome. Thank you as well. I also appreciate you as well for contacting me and letting me help you. So yeah, I'm glad we were able to cover this. So that's good.
Absolutely. And appreciate you meeting late at night last night. And I'll let you know how the exam goes.
Awesome.
And we will chat. We will definitely chat.
Perfect. Yeah. So I'll say this. I'm going to quickly send it off to you, and then you've got some extra workings if you need. And then it'll be good to hear how it goes. If the paper's similar, if you get the similar questions, like that I'm curious about, because looking at yesterday's papers and looking at today's, even looking at this 2022 paper, it all looks quite similar. Hey? Yeah.
Yeah, it is quite similar. So I think I'm ready. Let's do it.
Yes, nice. Good attitude to have, eh? So good luck with the DD. Yeah. I hope it goes well.
Thanks, Anthony. I'll chat to you tomorrow after 12.
Awesome.
It's done.
Okay. Enjoy your evening, eh?
Thank
good
you.
luck for tomorrow.
You too.
All right then.
Thank you. Have a good one.
Thanks. Bye.